Good evening, TheoTrade. This is Corey Rosenblumen. You're watching the Theo Nightly video for the 18th of August here in 2020. And the S&P, at least the S&P futures, are mere points away from their all-time high. In the SPX, we got it, right? Splitting hairs, I know. But the S&P is just above. Right now, the SPX, the index, is just above that high. And it's about 3390, just shy of 3400. And that's a little short-term target on this up move from the Corona crash that took us down to 2200. So that's your S&P levels at the moment. We'll take a look at the futures, and they're a little bit different. So today pushed us right back into the high. Volume is getting a little weaker. We'll zoom in on that as we push up, and that's not necessarily a bullish sign. We remain above the volume profile highs, which again, not necessarily a bullish sign, but the market does continue higher. And that's on the strength of the Nasdaq. The Nasdaq index, we're looking here at the NQ for the futures, just had a pullback. That actually did behave as expected with the profile levels that pushed us away from this prior high all the way back to the 20 exponential. Those tend to be targets on the downside, bounces or short-term call spreads, or you can also talk about the Qs, call spreads or in-out spreads to those levels. So the Qs as well continue to bounce off this 20-day exponential, and that's just what happened this week. So we continue to see relative strength in the technology sector. And that is seen, of course, in the XLK. I know it fell a little bit shy of the high, but still continues higher. And we still see that little volume divergence, and that just keeps us a little cautious. We have Amazon to thank, in part because of today's uptrend. It is a strong stock that continues to get stronger, and even it has pullback opportunities to the 20 exponential on the daily chart. And that most recent play was up away from really 311, 3,000, and 100, and just into this little pivot. And the play for those retracement trades for the targets is the prior high. And we see that happening on different examples. Google, Alphabet, maybe not as strong as Amazon, but still is closing in on the highs. And Netflix is off of its 580 pivot, but still continues to bounce off of its support levels. That's going to be about 470 per share. And taking a look a little bit lower, Apple, we're just not getting pullbacks. We're not getting retracements. And so if you want to trade that outside of the spreads, we need to drop down to the lower time frames, including the 30 and the 15-minute chart, if you're so willing. Otherwise, wait for those pullbacks. Be careful with your puts and your put spreads. The target for those are snapbacks, just like a rubber band. If it's a little bit overextended, it tends to snap back to the 20, snap back to the 20, and it hasn't really done that. So we typically do define entry points into rising stocks on those moving averages. Other stocks would include Microsoft, which is on its own journey back to the high. Key today was Home Depot, and that was an earnings type of play. Same logic. A stock that is overextended does tend to increase risk for a snapback, pullback retracement, and those tend to be decent risk rewards to join into the uptrend. The same can be said about Walmart, which made, oh, there it is, actually did make a new, always want to double check these things, all-time high? Is that at least a 52-week high? Yes. Looks like it might be a new all-time high for Walmart. Speaking of, the other thing to talk about before we look at individual stocks was the Russell. It is and remains the weakest. Today it was down about 1%, and that's in part because of the XLF financial ETF itself was down a little bit today. Bonds pushed off of support, looking at TLT, and traded up a little bit in today's session. So that's kind of the opposite play within bonds and the financials. That's the thought process there. Speaking of Walmart and some other stocks, we always want to scan, especially when the market makes a new all-time high. We want to see which stocks are joining the new all-time highs And that can give us a sense of relative strength or broad market participation. So I've done that with a new 52-week high scan, or just a new scan the last 52 weeks or 252 trading sessions. Either way, we still see the same names pop up. And those would include, we'll take a look at some of those. We'll detach the chart. That way I can give a better perspective on these names. So we keep mentioning Tractor Supply. And again, the reason why we do these scans is because these names tend to keep popping up. That which is strong tends to get stronger. And of course, that which is downtrending and weak does actually tend to trend lower and get weaker. So for example, we've discussed some other names. NVDA. We'll go into these stocks real quick. Mainly just looking at how these make new highs. So NVIDIA, that's a powerful trending stock. Higher highs, higher lows, rising moving averages, and pullbacks. And that's really more of a fade put type of play against 500. Just like this would be here. The target for put or fade or retracement smackbacks or slam downs, thinking a wrestling sort of term, is to the 20 exponential for the put plays. Otherwise, wait this one out until we get a cleaner pullback. We've talked about McCormick. That's one of those boring spice companies. We all probably use their product, but very few of us, if any, trade their stock. But it continues to get stronger. Higher highs, higher lows, higher highs, higher lows, all these rising moving averages. And it's pierced above the 200 per share level. Along with that is Hormel Foods, which is a little soup or canned food. It's a consumer good. We talk about the XLP, which is staples, and those stocks, most of them, are doing quite well. ConAgra brands. We just talked about Walmart that showed up on the list, and of course Tractor Supply, just to name a few. So these stocks do get stronger, but we can't just go long at any random point in time. We want to put these in a watch list or continue doing these 52-week high scans and purchase them on pullbacks or trade them on the intraday frame somehow to get long into these trending moves. But again, on pullbacks. If you're aggressive, you can certainly use an overextended, I think it's harder to define that, 3, 4, 5 days in a row to the upside, a certain number of dollars or percent above the 20-day moving average. You can play those fades. That's what a fade would look like a snapback rubber band. So these type of trending stocks give you, depending on your type of strategy, if you're more contrarian, you want to short highs and get pullbacks, or my perspective is, or preference is to go long the pullbacks into a trending stock. It's both perspectives are valid in terms of trading short term with spreads in these stocks. So plenty more stocks are in play. We talked about Whirlpool in the session today. And there's little pullbacks. There's flags along the intraday chart because it can't get a pullback to these 20-day moving averages. And that's the risk. I'll end with that. That's the risk of trying to step in front of a strongly trending stock, even though it does get the pullbacks eventually. And it may very well quickly pull back. That's the risk to going long the highs. It's also the risk to going short the highs. It's not as defined as a pullback to a trend line or a moving average. It's just sort of getting in front of a rally. And that rally may continue. So that which is strong does tend to get stronger. That which is weak does tend to get a little weaker. These little stocks are in play. Technology stocks do remain in focus. But there's plenty of names, plenty of candidates, plenty of trends in motion on daily charts behind the scenes of these monsters of tech, titans of tech, which would be these stocks, and of course, Nasdaq and XLK. These things are getting strong, but they can feel a little bit overextended, and we tend to be more risk averse. Keep in mind there are other stocks beyond these popular stock names at lower prices that continue uptrends as well. But again, the goal is not to predict the future. It's to find a trading strategy or style that works within your experience and risk tolerance. Options provide a plenty of ways to do that with spreads, in-out spreads, butterflies, back ratios. It almost seems limitless, but the goal is to find a strategy that works within your own style. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video for August 18th, 2020.